Global tax. It is a recently discussed phenomena all over the world. Discussed topic all over the world to encourage the right tax for the nation where the revenue derived by the corporates. Fight global tax dodgers together. Global tax, this is the latest concept discussed all over the world to have a fair share in the revenue derived by corporates in the respective countries. The United Nations General Assembly UNGA has voted unanimously to start discussions on international tax standards, giving developing countries, including India, a greater say in framing global tax rules. This is a most welcome step and welcome recognition for India. But it challenges a similar initiative led by the Organization for Economic Cooperation and Development (OECD) countries. Rather than undoing the OECD's decade-long work, the United Nations should build on it to erode the incentive for MNCs to shift profits to tax havens. The reform blueprint includes a global minimum corporate tax of 15% and rules that would allow every market where MNCs undertake sales the right to tax their earnings even if they have no physical presence there. Pillar 1 mainly targets digital giants. The drive was ratified by 136 countries and endorsed by G20 countries. National laws and global conventions were expected to crystallize in 2022 in the current year and to be implemented in the year 2023. Disagreements and policy details have pushed the timeline. India and other developing countries have been rightly pressing for a better deal. The African group that put forth the United Nations resolution reckons United Nations to be more inclusive to ensure the developing countries get a fair share of the tax pie. Dialogue among the countries is also expected to cover illicit financial flows and illegal tax dodging through criminal acts that impose heavy costs on governments. An estimated $500 to $600 billion is lost every year in corporate tax revenue. Of course, a bigger hit as a proportion of the GDP is suffered by low-income countries than advanced countries, depriving the low-income group countries of the capacity to spend on education and healthcare and other welfare schemes. Accelerating reform that will enable even small countries to tax digital giants makes sense. United Nations and OECD should find a meeting ground.